Welcome, delegates. Good morning, delegates, to another exciting session at Huddle 2021, the second day of today's session. This panel discussion will talk on DeFi trends and outlooks. The moderator for this session is Anirudh Rastogi, founder Ikigai Law. We have Max Song, founder Carbonbase. We've got Shantnoo Saxena, founder Encryptus, and Abhimanyu Kashyap, founder and CEO Ssafle. I'd like to hand it over to Anirudh to take the discussion forward. And delegates, I look forward. We look forward to an exciting discussion today. Over to you, Anirudh.
Thank you, Sam. Good morning, everyone, and welcome again. I think you are by now sick of seeing me. This is the third panel I've been moderating, and I was just spending the last 30 minutes, 45 minutes before this, talking to a wonderful panel on stable coins and the road ahead, which makes for a really good segue into this conversation. Obviously, and stable coins, as we understand, are one of the foundational building blocks for a robust DeFi ecosystem. So my first question to you, Max, Shantanu, and Abhimanyu, is going to be around that as well. What does a stablecoin of the future need to look like for an ecosystem or for a DeFi ecosystem of the future, right? What are the gaps in the current stablecoin ecosystem that need to be bridged to take us to the eventual promise of a robust DeFi ecosystem?
Yeah. So
Shantanu, Abhimanyu, please go ahead.
But I can start. Thank you so much, Anirudh, and thank you, Huddle 2021, for arranging this. Obviously, IMAI has done amazing work over the past couple of years to streamline, the focus area of regulations in India, and I wish them all the best for the future as well to bring out steady and good regulations more promptly, I suppose now. Anirudh, your question, based around what should be, what is the utopian world of stablecoin, what does that look like? I think there are a couple of aspects from profiling, that are involved, to minting that are involved, and all of this, and then to kind of disperse, ultimately to the user to be used. All of these, and also to maintain some kind of treasury behind it. So there are so many puzzles and blocks that exist in management and operation of stable coins, that I think if we talk about one central or private set of individuals coming in together, it won't really make sense. So most of the parties now working in oracleized frameworks or blockchain frameworks have to kind of come together, take each role, and still make like a seamless experience for the retail user that they don't even know. They want to get on ramp towards any kind of crypto. They find it completely seamless from a bridge that exists, and this bridge has to then still be multi-coin based, because it's not going to be one stable coin that rules the world. It's not one Facebook or one Google or one Microsoft or one Amazon. So it's not going to be one stable coin that rules the world. And to make like seamless in a kind of proximity, we have to define our in a certain structured way. Like we have specifications for, let's say, sovereign identity. They need to be built in as a controller into the system. Various ways that will help profiling better, faster, and they should be so liquid in terms of like integration, so that banks can integrate it and everyone can integrate it. I think right now there are multiple players working in the system, but we need fluid and liquid democracy, which we can execute with like people like Aragon. If Aragon kind of comes and defines, or some kind of DAO, primitive DAO that comes and defines this, and everyone kind of exerts their control and interest over that singular DAO.
I'm going to pick on one thing that you said and take this question to Max.
Yeah.
You said there cannot be one stable coin to rule the world. Why not? Why do we need multiple stable coins?
I think you're asking Max, or should I continue?
Max, yeah.
Well, I think that was a great introduction. And just to build on this point, I think if we look at the history of how the global reserve currency was established after World War II, there was the Bretton Woods summit in which we had to come to an agreement about how people would create a universal currency. And the two proposals was one a supranational currency, and the other one was pegging to gold. And the dollar actually was everyone pegging to the dollar and dollar pegging to gold. So we're actually in the I would say later stages of the implication of actually that dollar sort of intermediary peg, because later the dollar depegged from gold, and we're sort of left now just all pegged to the dollar. If we were to go back to 1955 and to rethink how we would rebuild it, right now we have an opportunity to think it. I think the plurality approach actually can offer a lot more flexibility. And the original concept of the SDR, the special drawing rights of the IMF, actually is a basket of currencies. So I sort of believe that there could be more fluid interchange between the different stablecoins inside a smart contract governing sort of stablecoin basket, and that can actually then solve the exchange rate fluctuations between different types of currencies as we make these trades. And then the other side of it is really fascinating, is that whole basket has an exchange value to Bitcoin, and Bitcoin has already have the global consensus, so it's sort of giving us a way to sort of peg it based on the original idea of pegging to gold. But now, that sort of peg to Bitcoin can be mathematically enforced, and we wouldn't have a risk of any individual country deciding to to inflate the monetary supply at the expense of all the other people.
I think,
Yeah.
very well.
And and I think what Max has done is he has very rightly put the concept in the right words. Sorry, just picking on Max to what you were saying, I think it's also very important. Think about the frontier markets today. Think about countries like Turkey. Think about the African continent, which is a very, very big trading ecosystem. Within Africa itself is a huge trading system. Within South America, it's a huge trading system. But what's lacking right now is because everybody is using this, they're either individual currencies, the country-based currency, or they're using USDT, which is tether, like peg to dollar. Why not? Again, picking up on what Abhimanyu and what Max said, combining the two together, think about all the frontier markets together using one stable coin for all the trading purposes. Maybe that could be a way out where a coin is actually pegged to Bitcoin versus gold, and then you have got something which is more concrete. So that could be another way of looking at how stable coins can actually be useful for just for frontier markets and for trading purposes instead of USDT and other currency pegged stable coins.
Yeah, and
Okay.
adding on to like that to finish it off, I think the onboarding and on ramp and off ramp plays the most important role, even if you consider any stable coin. So there are markets, there's demand, there's need, everything understood. Now there's Bitcoin, you can hedge it to that, peg it to that, and live the world the best way possible. But like bridging the gap, the centralized part comes in on ramps, on off ramps, and this is where the regulatory bodies need to adopt the conventions that we set here, and that's where the bridge happens, right? Like that needs to be formulated, and at this stage we should define various indicative laws that kind of understand what is the nature of transactions, what are the POT rules, and whatever it is should be done right then and there, rather than like once it has gone to the cryptoverse.
Yeah.
I think
So,
entry and exit needs to be monitored better. If they can manage that, they would always wanted to be gatekeepers, be a gatekeeper there. That's what it is.
let's talk about governance frameworks for DeFi. Right? What are the core principles that that private DeFi kind of frameworks need to necessarily adopt, and whether these need to be enforced through regulation or otherwise? So, Shantnu, would you like to comment on that?
Sure, absolutely. I think we have been playing hide and seek when it comes to crypto. So if you look at the evolution, it's blockchain, Bitcoin, and blockchain, cryptos, Bitcoin, and then you have got the decentralized finance coming in. I think what's missing right now is either we think left or we think right. What I think is really missing is why can we not combine the left and the right together and play music? Which means either we talk about decentralized finance or CeFi, which is centralized finance. But why is it that we cannot have a combination of CD5, which is CDEFI, which really means regulations on one side, the regulatory authorities on one side, and you have got this beautiful technology and financial products that's been delivered to the users in the form of DeFi. So this is something that has to be looked into, because I think, and it's not just regulators don't want to do it or banks don't want to earn money from an additional business line. It's about where to start. And I think that where is because the way the crypto industry has been booming in the last 6 7 years especially, it's been hard for the regulators to even catch up. Think about, the regulators are still trying to regulate the traditional assets, traditional crypto assets. Now, sorry, I call Bitcoin and Ethereum as a lot of traditional assets because that's the foundation of cryptocurrency. And look at in the last 6 years what has happened. From there, we have moved on to decentralized finance. We have moved to NFTs. So on one side, we are asking the regulators to help us out, but on the other side, the way this industry, the speed at which it's going is crazy. So what we really need is a center, an approach which is useful from both the regulatory point of view as well as from the company's point of view. uh, I don't think that any business would not want to earn money. They all want to earn money, but they want to earn money in the right manner. So, so regulations is one thing, and also how about the KYC, for example, the KYC and the user data, for example, how the user data is stored, and various other factors. I think that will play an important role, and it all boils down to education. Education for the ordinary people, education for the regulators, and then all of these forces combining together and coming up with a proper framework.
If the regulator is going to continue playing catch up as it will, and you rightly pointed out that we are struggling with traditional crypto asset regulation, what kind of self-regulatory approaches are we seeing as of today in the DeFi space? Abhimanyu or Max,
So
either of you.
yeah, I could start with that, and Max can we can give it to Max to carry on. I think at the moment, like what standardized approaches that have been formulated have been pivoted on the great efforts put down by, let's say, Compound or Maker, right? Like one of the two best governing bodies that have set foundation, set understanding of how disputes are solved, how the voting mechanisms work, how we can actually co-create value add over a network and capture that value inside it. If anyone has a problem, let's resolve that. This was done in a certain way, and the learnings have come from obviously Bitcoin. For this manner to be truly like decentralized in terms of understanding of BIPs and how we can improve that. Taking that to another level, the DAOs have kind of consummated at least a better approach, a better open discussion forum to manage and moderate those approaches. Now, when a protocol starts up, or whatever governing that is needed, when it starts up and triggers, we need to understand the major key stakeholders that are there, that need enough, let's say, liquidity in terms of democracy. They need to be given that shouldn't be going and and used for other means of, let's say, selling or other kind of type of transactions. They're strictly like governing, used for governance, and who all should be approached. And then there should be like a workflow protocol for any kind of retail person coming to the protocol to understand and use their liquidity to govern any or assert any kind of rights that they want from that. It could be a service that they want to take from that protocol, and this governance comes in, or they want to make a change, mutate that over time, and hence like that workflow enables the journey towards the protocol. We also work on that. And the other thing is, the people that are managing and governing the protocol in the start should be as liquid enough and as also distributed in terms of whatever knowledge areas that would be required over time by the protocol to govern the whole thing. And it needs to be multi-chain. So we need to have again, like this atmosphere which has been built up, which is called the internet of blockchains right now. This thing needs to be so interconnected, and that can only happen through like a multi-chain governance DAO. All right, and that like sooner than later will happen. Right now, it's more like lobbying and on governance on singularities. But I think this unified approach and governance need to coexist. And like I said, workflow for retail to the protocol, and the initiators of the protocol need to be as liquid, and that should not mean that the governance power given entrusted can result to economic a pleasure received in the end. So that
Sure.
those two ways can be disintegrated.
Max or Shantnu, do you have anything to add to that?
Max, go ahead, please, if you want.
I think there's some great points mentioned so far. I just want to highlight when the founder of Maker stepped back from his governance. I think it was a big learning lesson for a lot of people in the community, and also for the promise of actually decentralized, DAO ownership. Christensen is now essentially a community member and participant, and a lot of the core groups of Maker are now sort of semi-autonomous and able to function on their own. I think there's going to be like 5 or 10 PhDs written about that process, right? Both the human side of it as well as the technical side of it. But I think that's really the powerful piece of it. What I see happening in the United States is that there's really strong regulatory interest in coming in and taking some positions on DeFi, right? There's comments made by various people from the SEC saying if a project is if it's facilitating exchange, even though there's no particular sort of centralized exchange, it's still an exchange. There's some sort of version of that statement in more sophisticated legal terms. And when there was actually a case trying someone, they actually tried the person associated with the project. They couldn't try the project, so they just tried the person. So I think that the potential of regulators to enact the policies they want to make are really going to be human specific, and I think this is also going to lead to a rise where more and more DeFi projects are they may just have a built-in anonymity aspect to the founding team, and that sort of again is sort of emphasizing the community aspect. There's no individual one central leader. And then the final thing I want to say is if you look at the US security market overall, the fact, so NASDAQ is the exchange, but NASDAQ, actually, if you break it down to individual terms, stands for the National Association of Security Dealers. And then the AQ stands for automated quotation, which then became the exchange. So NASD actually was the industry alliance of security dealers who then became, essentially a regulatory body themselves. I believe that there is a similar process where the biggest projects in DeFi need to start being the standard setter about what regulation does before, in order to actually have more voice, and not just wait for the traditional regulators to come and tell them how to enforce these things. So that's
absolutely.
Yeah, I think Max, both what you and Abhimanyu said actually combines a lot of the regulatory aspect from the tech point of view as to the smart contract, especially, and how DeFi can be used through the technology ecosystem. And on the other side, we have got the regulators who are coming with the traditional mindset of proper documentation and paperwork. As I said before, I think it again goes back to the same thing, that if we say that it has to be purely technology that will govern the regulations, or we'll say it has to be traditional policymakers who will come and sit together to form policy, I think the marriage will never happen. What really is again required is a sort of a committee that comprises of both the tech gurus and, as Abhimanyu, you named few companies, maybe those and the traditional regulators, they sit together and they form a body and they say, okay, this is how the process is going to look like, and maybe involve more of public participation through and even public companies like banks, etc., who can, or the companies who offer financial products, to share their inputs. Of course, at the end of the day, we don't want to make a server dish which has got a combination of everything, but at the same time, you need a mix and match of regulations and technology together to come up with a proper framework. And I think this will slowly help design the future for the DeFi ecosystem. See DeFi, as I said before, maybe. Yeah.
I think Anirudh, I like
No.
to finish this. Like this would add some, something for you is like till the time the law is not enforced by technology, or till the time that all laws around the world, all right, like all of them are like not enforced by technology protocols, till the time it won't happen, because anything that is happening cannot be moderated. Like one small things cannot happen, right? Like a person coming from China or India going to a protocol that rests, let's say, in a European nation, all right, engages with that, does a transaction, or whatever that thing was, that transaction could not be enforced because that cannot be, you can't even consider that. And then it changes completely when someone from the European Union is doing that same transaction, right? It changes dramatically. Or let's say, depending on any kind of DDAA policies or any kind of OECD governance mechanisms, it is then like different for different nations. So till the time all laws get onto the internet, right? And like as an AI, like the internet knows
Sure.
what's happening. Till the time nothing will, everything else is just we're trying to formalize that.
Well,
Then once we have like 100%, we're like still loading in the law internet, like law and
Sure.
internet,
Yeah.
we're loading.
So I'm going
So
to I'm going to move to the take this conversation more to the business side and what's happening as of today in India. And my first question on that is, what DeFi applications do you think are being built out in India, or are likely to be built out in India for over the next 2 to 3 years? I want a very short answer to just get us started. So Abhimanyu, to you, but 30 seconds.
okay, I think
What are the key
uh,
applications you would likely to see here?
I see definitely there's a need of lending and local lending and borrowing infrastructure with collateralized assets. That's not happening, but it should. It should be seen very shortly. Maybe like with a good bill that comes through. Then real estate, going on real estate market towards this. That's coming. I think some project is happening as well. I don't know what its Indian ties are, but I don't want to name the project. So real estate and lending borrowing are I think the first ones to come, and that creates collateralization or asset value flipping over to this side.
Sure. Shantnu, I mean, feel free to draw from your
Sure.
experiences in other emerging economies as well.
Well, I think the one of the other major aspects is the prediction markets, which is coming up in a very, very big way, which combines the power of DeFi and the prediction market. So that's one area where I think we'll see a lot of companies coming in. Even in India, I think there is a concept in lending and borrowing. Again, I'll keep it short. So what we see is there is a lot of people who are actually lending on the protocols, but there are very few borrowers. So what I've seen in the European markets, and especially there is a company from India that's coming up, and what these guys are doing is they're creating the borrowers market as well, which effectively means using the DeFi ecosystem, you can actually borrow money and use it in the real life and take it as a loan and then pay back to the protocol. But there is no banks involved in the whole process. So I think these are the two areas where I think the
Intermediaries
borrowing
involved.
markets. Sorry.
Last mile borrowing involves intermediaries, and I think that's the only
Well,
problem.
that's a beautiful concept. That's a beautiful concept. How they have been able to capture this is. By the way, I'm an advisor to this company, and what I like about the concept is it's done through gift cards. So there is no financial institution involved. The user takes a DAO. The user gives their Ethereum. That Ethereum gets collateralized. Against that, they get
But the ultimate
18%.
retail, like India or any developing country, the actual borrowers market is a non how do you say, a non uncollateralized loan market. All right, so like uh,
But
personal loans
right
cannot
now it
happen.
is correct.
The
But what
ultimate
happens
borrowers
if you get a
market is not
gift card?
a collateralized market in India or any
Correct.
developing country. Cannot
Correct.
be.
But what happens if you get a gift card against
Yeah, the asset on
if
which the borrowing is generated actually is the institution itself, because they hold book value and can further give something based on trust. So right
correct,
now
but
the end market for borrowers in DeFi is nothing apart from collateral, cannot happen without collateralization, and that's a
Yes,
big
sorry, I
area.
would just
this is
like to understand. Shantanu was explaining the actual application. So maybe if you could just complete explaining what you guys are doing. I thought it was quite an interesting use case.
no. So exactly, as Abhimanyu rightly said, that there is a problem on the borrowing side, and so really what's happening with this application is the people who want to borrow money against the DeFi, what they do is instead of going to a financial institution, what they get is a gift card, right? So imagine if you've got an Amazon gift card, which you can use on the Amazon website. The companies, anyways, when you sell a gift card, you earn a revenue out of every sale. Once you earn the revenue, that becomes your revenue stream. And then the Ethereum that you have taken from the user is actually sent to one of the protocols. Again, it's a permutation and combination of different protocols which give returns to the users. And against that, a user has got, depending on the AI, like depending on like 10 to 15 days. I'm not saying like a user can go ahead and get a 6-month loan. Depending on the protocol, the user actually pledges their asset. Against that, they get a gift card. And once a user comes back and pay in USDT, they get their asset back as well. So think about how do you buy products in the market today? You have to sell your asset and then get fiat into your bank account and then buy. All what this company is doing is, it's a beautiful concept wherein you're simply getting a gift card. You have got X number of days to pay for your gift card, and once you pay your money back, you also get your Ethereum back. And all what you really need is a good gift card providers, like a set of gift card providers. I mean, I can't name the companies, but we have signed up. We have got access to about 120 countries right now with this. Plus, what you really need to build is the fiat on and off ramp for the users to actually be using it in the real world. I can share more details if you want after the session.
So, Max, how are banks today using DeFi on the ground?
Well, I've been watching the space a little bit. I think that Goldman actually is launching some sort of trading product around DeFi tokens, and I think the sort of sales and trading arm of these investment banks is maybe the first part for them to participate. The very idea that there's a protocol that can store crypto assets natively without necessarily risk of custody, and then create yield is a very disruptive idea to the banks. I've had a chance to share with several virtual banks in Hong Kong about the promise and peril of DeFi, and it's really staggered the operators a bit. I think that there's not yet today, at least what I can see, the full crossover where a bank actually that takes retail deposits has decided to allocate a portion of their assets into DeFi. I'm a angel investor into a licensed digital asset bank where they're able to, from the local authority, have the permission to actually hold digital assets on custody, and you can store your Bitcoin there, and you can also convert it into fiat, and there's a whole sort of pipeline. But they haven't yet offered DeFi saving products, So I guess I'm personally waiting for the moment in which one of the either virtual banks that are happening, or the open banking in the UK, or one of these new age digital banks is able to fully connect the product creation that's happening in the decentralized world with the traditional sort of KYC and very rigorous application. But as far as I know, that hasn't happened yet.
And sorry, Anirudh, I'm just adding a point here. Actually, this is something that we are also trying to achieve with the banks in Europe, where the banks are giving negative returns right now. If you keep money in your bank accounts, you have to actually pay money. And this is a protocol that we are trying to build, wherein the banks can simply plug into our APIs. These are not direct banks themselves, but neobanks or digital banks, which are licensed as a sub-bank under one of the major banks. And I mean, we have signed up already with one bank in Europe with about 69,000 users. And what they will get access is to the DeFi ecosystem using their traditional. So they are onboarding the customers traditionally. What they're offering to us is the on and the off ramp. And in return, we are giving the DeFi ecosystem to them.
Okay, Anirudh,
but we are not the only one. Yeah.
I just want to close this question off as well. I think banks are not using DeFi because till now we used to integrate banks, and now banks have to integrate us. So that's not happening yet. All right. So this smaller banks. So banks were used to making like their own tech stack, and then we used to embed them as SDKs, and now we are making things that they need to embed as SDKs. It's not
correct. Exactly, and that's what is Abhimanyu happening in. I can send you the project details. Maybe this is not something that you've come across.
Now we need to have smaller fishes, like smaller banks, to come.
Exactly, they are smaller banks. I'm not talking about. Yeah.
Let's just have a smaller bank like doing all this, all this.
Exactly.
And then
yeah, they are not major banks. I'm not talking about any bank. I'm not talking about.
Next 5 years, we're going to see like bigger banks using smaller banks as programmers to building in protocol which embeds the protocol to them, not them to the other services.
Exactly. That's what we are trying to achieve, and not with major banks, but with smaller banks. Sorry.
Like you don't see a Yes Bank going to, or you don't
Guys.
see a Yes Bank or an Indian bank going to a maker to integrate maker. You understand? Like that's the approach that they've never taken. They've never outgressed. They've ingressed.
Correct.
And
But
now it's time to outgress and build like another, like their tech stack is just like any other tech stack. It's not the tech stack.
Okay, Abhimanyu, next question.
Even in India, sorry,
Anirudh,
Anirudh, just last point, maybe just for everybody's benefit. Unicast is a great example within India. You can Google them up and you can look into it. But by the looks of it, Unicast seems to be a good concept.
Okay. So Max, to bring you back into this conversation, what's a bank of the future going to look like, right? So think 5 years ahead. What's this space going to look like for the banks?
Yeah, definitely. Well, I think that there's the two parts, right? There's the digital banks that are trying to disrupt themselves before they get eaten up, and then there is the DeFi guys who are now big enough to maybe start applying for bank licenses. Personally, I think that the DeFi applying for bank license is going to win because they are born digital, right? They're born digital native, and then they just have to learn the slow moving, sort of they have to get accustomed to the slow moving bureaucratic piece that requires them to get licenses, but they're very financially resourced, so money is not necessarily a problem. To me, I think of something I wanted to maybe add a different dimension to this conversation. Like we are also because of climate change, we're actually at a reshaping of how finance is going to work, right? QE has changed the paradigm. QE now means that governments have the unlimited capacity to make money, right? And this is something that there was a social contract that was there for a while. And then 2008, we sort of broke the contract. And now 2019, 2020, we've really just we've made the contract into an origami. So what we're going to do in the future is we're going to see a lot more QE because this is actually a very, very powerful place to exert influence. But at the same time, we need to also drive a lot of value to basically addressing climate change. Otherwise, our entire economies are going to get wrecked. And so there's a really powerful concept that's coming up and slowly moving in certain circles called CQE, carbon quantitative easing. And the idea is that at some point in the future, climate change is going to get so bad that central banks are just going to make money dedicated to the cause of reducing CO2. And instead of giving the QE money in the beginning to the banks and hoping that they sort of trickle down to the rest of the economy, they're actually going to give the money to carbon removal projects first. And then those guys are going to get free money that they can then spend to build infrastructure to reduce CO2. And then we're going to see economies, we're going to see the world's economy sort of reorganize around this concept. So my vision for the bank of the future is the bank that actually has built the idea of carbon credit sort of economies fundamentally into the money supply. And allows the individual users, when they actually make investments, that there is some version of filtering, right? So the bank is actually playing a sort of a role in actually trying to decide where the money goes. Today, we don't have any control where the money lends, right? If my money is sitting in a traditional bank, I have very zero visibility. And taking the concepts of DeFi and putting into that model, I should be voting where my money goes. I should actually be allocated governance tokens that allow me to build my portfolios. So that's kind of where I see the sort of directionality of.
No, that's a fascinating idea. Thank you. Yeah, Max, I have one more question for you, which is taking from what we were discussing a couple of days ago, is how you're seeing DeFi and NFT applications coming together.
Definitely. So NFTs is a game changer. I was reading today that in the pandemic, there are now people in the Philippines, right, in Vietnam, in various parts of the developing world, and I'm sure in India in large numbers, who are now able to pay rent and make money because of NFTs. They've actually been able to make money, so much money they bought a house or an air conditioner or upgraded their moped. It is incredible. This is actually the first crossover that we see, and because NFTs are so easily accessible, right? You don't have to trading numbers is very abstract, but trading collectibles is very concept. Everyone has done that with baseball cards. It's really unlocked this new portion of it. And for me, having sort of seen efforts extensively in the STO space where people try to do security token offerings, and all of them have all just died, very, very horrible deaths. The NFTs actually represent, beyond the artwork part, digital native assets, right? That are fundamentally fractionable, right? To fractionalize a Van Gogh painting, you need to have provenance, you have to digitize it, you have to put it somewhere in custody. To digitize a CryptoPunk, you just put it in a contract and then boom, it's done. So to me, the ease by which the digital native assets interoperate and fit into each other is the future. And I would even argue that perhaps like the NFT market is going to be bigger than the DeFi market in another 2 years, because the DeFi is going to basically fund the NFT market. Yeah.
Okay, interesting. All right, so I'm not sure we have much time now. I'm looking at the questions that have been coming up as well.
On the banks of the future, like, apart from everything that Max said, and Max said like beautiful things, CQA is something that truly, like, I'm going to follow that. I think I'm going to make a point, to do something around that, or to at least educate people around, at least myself first, and then others. But yeah, that was a great point. And what I think, like, just saying that a universal bank will naturally come in place, because every protocol follows some core set of standards, set of rules that will start getting accepted, and some will naturally start getting rejected. All right, and it's going to be, obviously, why I'm saying a universal bank is called, it's not going to be a universal bank, it's going to be a universal bank code, right? So it's just like a set of a tech stack that has all the banking or financial technology as bundled in. All right, that's going to be used, and that's the standard. That's going to lay down what anyone anywhere can do with it, and it's going to be it's the same for everyone. We're all humans as a species, and we're trying to protect humans as a species. All right, we're not trying to protect Indian humans or Chinese humans or Vietnamese humans. And once everyone starts understanding that, a code doesn't have a bias. That's the only way that we are trying to solve this human problem. So the idea to have a universal bank code rather than a universal bank should be like something which is the bank of the future looks like. And anyone wants to use that can use that and partake in it and become service provider or any kind of functional stakeholder in that. Maybe 10 years. I don't know how much time, but that's where we're going.
Okay. So my next question for all of you is: can DeFi ever be truly decentralized, right? And or is it likely that, well, core services could be decentralized, but you will necessarily have these plug and play services, certain services which have to be built around, which will be centralized in nature, and maybe much of it will be also centralization forced upon by regulation, right? Because regulators would like. As regulations evolve, I think you will see some elements of centralization there as well. So, any thoughts on that, Shantnu?
I think this again brings us back to the question that we were discussing earlier. But I genuinely think that what is really required is education. That's the first and foremost thing that's required. Abhimanyu did mention about an interesting point earlier, wherein we need one single protocol. But what really happens? I think it's not just technology that people are trying to solve a problem with. It's also a lot of egos and a lot of other local infrastructures that a country may have a problem. Why should I follow their protocols? Why should I not follow? Why should we not follow our protocol? So I think education will play a vital role. Every country, I think the first step would be more of the CBDC aspect that will come and flourish in different parts of the world. And then, of course, you'll have got these financial products. I see a lot of acquisitions probably happening, mergers and acquisition, wherein, of course, the bigger banks will acquire the DeFi-based companies and see how best can they use the infrastructure. So these are some areas where I think we can see a lot of value addition. I don't know if I've fully answered your question or not. Sorry, I can't hear you.
Anirudh, you're on mute.
No, I think you have, and it's the point you made about regulators, being unwilling to kind of accept losing jurisdiction to other countries or to private actors that in fact claim to not be embedding in any one jurisdiction. That is going to be a challenge that will emerge, and that will force kind of regulatory frameworks that are likely going to increase centralization than reduce. So yes, certainly that's going to be one challenge that we have to be ready for.
And Anirudh, let's think about it. Think about global compliance. Sorry, I'm not trying to shift or drift away from the topic, but think about global compliance. So, for example, if I do fraud in the UK today, I can easily go to any other company with that, any other country with that money, and easily get a loan or get a lifestyle that I want. But is it right? Can the regulators, can the global authorities not solve this problem? They can. But are they willing to solve the problem or not? And the answer is clearly no. And this is why we have to think on a more practical approach as to how things will shape up in the long term.
Okay, so Soham is here to end the session. So I'm going to stick to the same question and just collect views from Max and Abhimanyu on can DeFi ever be truly decentralized, and we'll close with that.
Max, you want to go first?
Can you hear me?
Yeah.
Okay. I think that in the future, banks are going to be the KYC providers for the economy. Like instead of people trying to integrate with the bank as an API, like the banks are going to try to integrate with the liquidity pools. They're going to compete on providing the KYC service because what do they have in space? They have physical retail branches, right? They have like people manning the desks. The DeFi protocols don't want to have the heavy infrastructure. They can invest in a bank, or they can invest in a partnership with a bank to sort of provide the KYC. So I think that sort of power dynamic is going to change, pretty dramatically over the next few years. And then I think the other part is, the way that decentralized governance happens today, I think is also still very early. There's a lot of useful academic research and also simulation that needs to happen in terms of actually how do you sort of have 10,000 people, 100,000 people participate in governance, right? And I think the fascinating thing to me is that if you look at the democracies of the world, not everyone votes. We take behavioral economics. We shouldn't expect people to automatically vote. But with DeFi, what we can do is you can actually enforce penalties. If you hold, tokens in the DeFi protocol, you don't vote, then we take some of your tokens away, and that changes, economics fundamentally. So I want to actually sort of explore, and I want to propose, and love to do research with all the people here. If there's sort of dual-sided participatory democracy, not only in terms of being a privilege, but also being a need. That's going to change the behavior a lot more.
Yeah. Adding on to that, my suggestion to making it truly decentralized, or even not a suggestion but a view first, is that because of privilege, the word used, I was wanting to use that. Right now, the protocol creator demands privilege at various times, or the initiator demands privilege so that they can have proper vesting, or they can have if this protocol loses, they lose something with it. That is good because there's some stake involved while going forward. But I think governance, like I said, let's remove this right now. Economic value to the governance value in the same token needs to be kind of like divided so that there's better privileges. The privileges become economic very soon. The privilege to govern becomes economic very soon, and hence we see a lot of protocols not going to the last mile, and failing in between, or losing interest, or deriving value, discounting value, and stuff like that. So I think that's that's what we need to do for decentralization to be truly decentralized. If the government wants, let's say, governance rights on a protocol, give it to them. It has no monetary value, but give the governance value to that. So I think that should be something in the future.
Interesting. Well, great. On that note, I think we can sign off here. Thank you very much, Shantnu, Abhimanyu, and Max. Been a pleasure speaking with you, and I think there's a lot of exciting stuff coming our way. So let's wait and watch. Thank you very much.
Thank you,
Anirudh. Thank you to all the other fellow panelists. Bye-bye. See you.
Thank you, Anirudh. Thank you, Abhimanyu. Thank you, Max. Thank you, Shantnu.
Right.
I'd like to thank our partners who's helped us make this possible. Title partner Ssafle CoinDCX, powered by partner CoinSwitch, brought to you by partner BitGins, Platinum partner Facebook, Gold partner Geotis, and Bronze partner Hubie Global. Thank you, everyone, and look forward to the upcoming sessions.